Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Always wonderful to see you guys. Always great to be back here looking at, we have green days, we have red days. Always an exciting day on GameStop because there's always something for us to discover and potentially figure out. So this has been an interesting week. We've had a lot of what I call this, like we've had a lot of weeks of let's call it incubation. Not a ton of too much interesting stuff from say like the kind of broader community. And then all of a sudden, we get some stream of stuff from Ryan Cohen last week. We had a little bit of excitement mid-February, but then all of a sudden it disappears. Like, what's going on with that? What's happening with our price action? Like, how are we like legging down again? But the community's been really active this week. It's been interesting to see what people have got over on Superstonk. Like a lot of really interesting posts. We've got stuff. We've had these new indicators past couple weeks from Ultimator, right? We've had um, otherwise is out there taking a look at metadata. We've got what can I make today, putting stuff out there. We've got some people who maybe not some other people doing some great tinfoil work out there on the Ryan Cohen stuff. So very interesting. But what else do we get this week? And this is what we're going to look at a little bit today to start things off. We get a little bit of action here, right, from Larry Cheng and from Nat Turner. A little bit of news from Nat Turner that's very exciting. We're doing some. We got the PSA app, right? The PSA app is ready to go. You're scanning cards. They got a little video demo out there. Go check it out on the PSA site. But this is right. This is the GameStop PSA blockchain market. This is where, this is the idea that, I first got some of these inklings from some people in the broader community, right? So obviously I always recognize that inspiration for ideas comes from the broader community. It's the fact that I get to be part of this, group of several million people who are, thinking over these ideas from lots of different countries that are a part of the GameStop hive mind, right? So that I'm able to piece together these ideas in the first place. But one thing is that as kind of solidified together. I mean, we talked about this at the stream last Friday. Is the I don't know what somebody referred to it in a comment as like the Pokemon 500 as opposed to the S&P 500. But it's something like, right, GameStop putting together this blockchain project. GameStop basically being able to take the NFT marketplace, pair up with PSA, and then basically, right, take all of this frozen liquidity, because if or this frozen capital, because if you think about it, right, collectibles, everybody who has Pokemon cards. I use the example of myself. I have this one box that's filled with thousands of Pokemon cards. That is, well, yeah, thousands. It's probably like 2,000 or 3,000 of them that I have. Just like sitting in there. I've had that same box since I was like, 5 years old. I think I started collecting Pokemon cards in 1998. Pokemon Red version was like the first game I got for my Game Boy. And I just have those cards there. And I know I probably have like some 19, like I probably have a PSA 9 or a PSA 10, like, 1998 Charizard or something that's could be worth like $500. Like, I don't know. But all those cards are sitting on my shelf, and I can't necessarily very easily take those and then transform those into into something liquid. I can't make that liquid. It's difficult. There's a cost to entry of the market. The idea of being able to submit PSA graded cards through GameStop made that a little less expensive. That made that a little easier because there's a GameStop back in Connecticut, right? There's a GameStop in the mall, like 10-minute drive from well, I guess it was my house. My parents moved since then. But in any case, there are GameStops, right? They're not that far, and they're easy to get to, and they're in malls, and you can go get lunch like after you submit your cards or whatever, right? But or Orange Julius, if people still do that. Remember Orange Julius? That's a throwback. only 90s, early 2000s kids, maybe 80s people. I don't know. What were the 80s like? I don't even know. Did they have Orange Julius in 1987? Like, was Reagan like, I love Orange Julius? Like, I just imagine that. Trump in the 80s being like, oh, I don't smoke, but it felt like something natural for me to do. Also get Orange Julius. Like, I don't know. Never drink alcohol in my life. It's the worst drink. But you know what isn't? Orange Julius. Apparently he's Jewish now. Like, it just turned into Mort the Jew. Can I say that on YouTube? I could say that on Twitter. Can I say Mort the Jew on YouTube? It's like, I don't know. It sounds wrong. It's just a character from a TV show, but I felt a little wrong saying it. I don't know. In any case, uh, I digress. But you can, right? We can. What's very interesting about this PSA app, right? And this is like what we were talking about last Friday. Was like, they put out an app. They get like a marketplace, right? And all of a sudden, you can tokenize these individual cards, right? You can send a card over to the PSA vault, goes in the PSA vault. You get issued a token, right? So you get issued a token, and now you can trade that token on a market with live pricing as though it's an NFT, as though it's crypto, as though it's, a tokenized security or something like that. But you have object permanence in the digital realm. So you have blockchain, which guarantees object permanence. So like when your card as a unique a unique digital signature that cannot be copied, it cannot be tampered with. And then you can trade that unique token, and the actual like card that it references can be in the PSA vault. Or right now, that what Nat Turner is showing us here is like, you could potentially have the card and then scan it and get it into the database, see what it's worth, right? You can do this ahead of time. This is exactly what we're talking about. So the cost to enter this market, man, like apparently what Nat Turner just revealed is like they literally had people at PSA take millions of photos of cards and then just put this into their database so that you take the scanning app and it's just instantly going to recognize what your card is, and it'll bring up all the cards, show you the price history, show you the sales history, and then it won't officially grade it for you, but it'll ballpark, hey, this is the trading range of this particular card over the past year. And you're going to go like, oh man, like I gotta, like if this is a 9 or a 10, like this could be $200, this could be $500, like I better get, like that's just one card, right? You can send your collection over to the PSA vault then, and you can get it appraised, and you can get, right. So like all of this is coming together. And we see this from, right, I'll make this a little bit bigger so you can see, right? We see this from Nat Turner. He's showing off the app here. He's showing off the scannable functions. Very, right, very cool to see that play out. Very cool to see this sort of getting into, getting going, and just very interesting too that like Nat Turner bought the company like with this in mind. Like this is a guy who wants to do this stuff for collectibles and cards, which is really cool that this dude is on the board of GameStop. Very cool that this guy who's doing this, who purchased a company, who purchased PSA in 2021 specifically for this purpose, is working with GameStop. That's awesome. But then, right, earlier in the week, of course, what we get here from Larry Cheng, what does our guy have to say, right? This is the guy who's talking about, hey, you know what you want to show, right? We saw back in December, we saw a little earlier this week. What's Larry Cheng talking about? Hey, the next thing that you want to see for a company to really see the share price move, to really defeat a bear thesis, is you want to see revenue growth. And then what's the next thing that just really breaks the bank in terms of, showing revenue growth? Well, the step beyond revenue growth is seeing increase in rate of revenue growth while decreasing costs. What is GameStop very likely going to present at March earnings? Number one, revenue growth. Number two, increased rate of revenue growth. Number three, decreased cost of increasing that rate of revenue growth. That is a trifecta. That moves GameStop not only from just, hey, it's a profitable company, hey, it's a profitable company that is growing, right? But it is a profitable company that is growing its growth while reducing the cost of growing that growth. Okay, that's a rare find, right? And Larry is giving these kind of cryptic suggestions that, hey, that's what you want to look at, right, when you're investing in a company. That's, man, if you can find one of those, chef's kiss. It just so happens that that's very much on the table for GameStop right now. And Larry Cheng happens to be an insider who's not allowed to divulge specific information about the company, but he can go on stuff like this. And very interesting as well to see Larry Cheng earlier here go, right, talk about transferring his card collection to the PSA vault. Likes the online management platform, but he says, right, having done this, it's like upgrading from holding paper stock certificates in a file cabinet to having an online brokerage account. Would you look at that? Larry Cheng making the comparison to the PSA Vault digital app integration system, likening this to having an online brokerage account, which is what we were talking about on Friday. This is exactly what we were talking about at the live stream on Friday, right? That GameStop with PSA could turn this into a full-on marketplace where individuals, right, whatever, 17-year-olds, 18-year-olds, stoked about trading cards, stoked about maybe, I don't know, learning about market mechanics, trying to make some money. They bypass stuff like Robinhood. They bypass Robinhood. They bypass meme coins, right? Look, there are lots of practical applications for blockchain. I don't know that much about blockchain. I'm not into the technicals of it. I don't know that much about the blockchain market, but I know that meme coins get rugged all the time because they're based on nothing, right? They're just, Hawk Tuah coin or Doge coin or like whatever these things are called, right? Although Doge is now a department in the government because Elon liked the meme, this is the world we're living in. This is exactly what we were talking about during Friday's live stream. And this is Larry Cheng making direct allusions to, as direct an allusion as you can, right? To this type of thing being moved into place. So I would watch out. I'm very excited for what, not only are we going to hit all these three criteria for growth, likely that Larry is talking about here, that really causes price up. But we also have the plan that we've been talking about we see the early stages of this being put out by Nat Turner, and we see some of this from Larry. So, we can talk about this, again, this Friday. We can go into some deeper details. Well, today's Friday, right? Tonight's live stream, I should say, Eastern time, right? We are going to be having our live stream 10 p.m. Eastern time. So expect an announcement on X, but we'll get to that in a bit. But all right. And then a little Gandalf meme. I like my little Gandalf meme here. I was quite proud of myself for thinking this up. Right. What does this make GameStop into? I mean, it makes the PSA or the GameStop app. Maybe they become an integrated app. It makes them what Robinhood should have been, what Robinhood marketed itself to be in 2018, 2020, as making investing accessible for the little guy, for the average household investor. The idea is Robinhood, the guy who takes from the rich, gives to the poor, right? The idea there is being able to deliver the privileges that back when there was all kinds of fees and you didn't get live data and you couldn't do options and you had to be approved and you had all this stuff, right? That was a barrier to entry, and there still are barriers to entry. But removing those barriers to entry, capital requirements, being able to offer partial shares, things like that, right? Robinhood billed itself as being a champion for household investors. Only then in 2021, with the GameStop saga, to reveal that they sell a majority of their order flow to Citadel, so that order flow can be front run. And of course, they turned off the buy button, right? They turned off the buy button. They locked out household investors. They force closed certain positions. I had people I was trading with back then too. Had positions force closed. Had options positions force closed. I mean, I think that actually ended up working out for them, but because they would have held them into the red period. But in any case, the idea here is being able to, taking that away, I suppose, from the customer and putting a stop, right? Putting a stop. I think the real betrayal is selling order flow to Citadel. That was the no. But in any case, that's Robinhood for you. And GameStop might be positioning itself. GameStop and GameStop investors who were betrayed by Robinhood may stand to see GameStop becoming what Robinhood should have been in some senses, or could have been. But that's the idea behind the meme there. Okay, so Michael, you're talking about prospects of the company, but get into the charts. We want the charts, man. Keep the options and the money stuff, like the numbers. Click, 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 and the beep boops. Do that. So yeah, all right. So like, what are we looking at today? Not too much new in our market context. I mean, right. Uh, Check out yesterday's video if you want a deeper breakdown, deeper dive. We can talk about this again in the stream. And basically what I was looking at in terms of our momentum stuff, yeah, definitely glad I posted about that yesterday, because it does indeed look like we are going to see we are seeing a collapse of momentum, depending on how we behave around these moving averages. So it does look like we are going to really start moving down toward the 50-week moving average on the S&P and on Bitcoin, right? Just to take a look, right? These are two slices, indexes, essentially, right? Bitcoin is a way to gauge the crypto market, just like the S&P is a way to gauge equities markets. Yeah, right. Similar positions, similar formations here, looking very similar in terms of momentum and price setups to how we looked heading into the 2022-2023 bear market. And it does look like we are entering into the early stages of that type of correction. So yeah, basically based on yesterday's price action, we did indeed, we started to move down pretty steeply. We went through a couple pretty volatile positions. Slipped through the 590, right? What would this be? 590. Well, 590, right? We slipped 595. Did we go back? Yeah, we sorted to trade back up towards 600 early, and then slipped 595, bounced off of maybe like a little put wall bounce there, right? So occasionally, like in SPY, right, as you go down, IV goes up. So your put is going down, IV is going up, and you can cause like, I think it's usually a Vanna cushion that does this, but like as IV goes up, you can kind of like the hedging kind of for a little bit can get a little bit stuck on top of these big put positions for a little bit. Sometimes traders take that and then turn that into a bounce. So it's very possible that that's what occurred here on this very sharp move down to 590. And then the bounce back up there. But then late in the day, we started moving back down again, went right through. Again, we kind of got this scrub-a-dub-dub. This looked more like it, but right, this kind of thing, a little scrub-a-dub-dub. That's like that put wall effect, Spot Gamma describes it. And then we just ran down even through, 590, slipped down through there, volatility up, and then almost went through 585, but pulled up there. Only went through 585 after hours, down to about 583, where we have some more neutral gamma built up if we take a look. Guys, it's red, man. It's puts, which means volatility, which means the market is not necessarily in ideal conditions. Well, we would say acute, what we've seen in the past. Acute ideal conditions for GameStop, insofar as this makes it easier for institutions to engineer GameStop's price down by shorting ETFs directly. So when you're in a bull market, if you go ahead and short an ETF, it's a bull market. The value of the fund is increasing. The fund has lots of inflows, and you're shorting that. That means that puts a strain on your liquidity because your position is losing value as the ETF goes up. But if the ETF is moving down and you open short positions on an ETF, then your liquidity goes up because then that short position ends up being profitable, right? As you anticipate outflows, something like that. So you can target these ETFs that contain GameStop, and you can short them so that they decrease in value. You accelerate, you artificially accelerate and engineer a faster move to the downside in those ETFs so that they rebalance by literally delivering themselves, removing weight from themselves, delivering themselves of shares of GameStop, excess shares of GameStop. So that's where we see things like, Richard's pointed this out. Richard Nunes pointed this out. So you'll see that like when the market moves down, GameStop will move down with it. Sometimes usually at a faster rate, but then when the market recovers, GameStop won't recover at the same rate. They'll blame this on the broader market context. We've seen lots of these reports, right? Shares of companies in retail and e-commerce are trading lower with broader weakness in the sector, blah blah blah, right? Why doesn't it come back then, right? As the market comes back, why don't those ETFs necessarily go and then rebalance? Well, because the short positions opened on those ETFs don't get closed. Those short positions remained open. So when the ETFs recover, the ETFs separated from the S&P do not recover as much as the S&P itself because those short positions are remaining open. So GameStop only kind of slightly comes back because it's only the shares that were naturally delivered of those institutions by the actual downturn, by the actual outflows in the broader market that then get added back as you see recovery. So that's why you see that disproportion there. So that's what we saw. I mean, we're going to be in these volatile situations. We have a lot of put gamma expiring this week. Our next weeklies are not quite as strong right now. This week we have a lot of buildup of put gamma. So maybe over the next few weeks into March OPEX, things kind of slow up. We do have Bank of Japan coming March 18th, March 19th. What we may be seeing here is deleveraging ahead of that. I've also heard somebody throw out there that there's COVID loans, right? As we go into March, there are very low interest COVID loans, five-year COVID loans that are coming due. And part of that is if people don't necessarily want to take the higher interest loans to extend their margins. So they are deleveraging themselves as a result of that. That's a possibility. So yeah, GameStop yesterday looked pretty similar. I would say it largely, in this case, it largely did kind of trade with the market. It wasn't quite as steep a decline actually as the market saw. But there was likely some of that interesting after hours action. Didn't really, not a lot of this caused by options. Not a lot of this caused really, don't know what's going on with the shares available to borrow, but they are not being utilized for direct shorting. GameStop is not being directly shorted. So this is all occurring peripherally to GameStop again. So this is another indicator that we're probably looking at ETF shorting. Yeah, shares available to borrow actually increased, right? They went up to 3 million. So they went up a little bit in pre-market today. Technicals, this is what I sort of talked about a little bit yesterday. But basically, I sort of reiterated this to the reading crowd since not everybody necessarily watches these videos. But the image that I see here, right? What we can see, and I played around with this a little bit. I call these teleportations, or I call these transpositions. So basically, the fundamental idea here is this looks like musical notes being transposed to me, right, on a staff. So if you were to take these notes and then move them down this staff, you would transpose them down by a fifth tone. So the notes would look the same if you just move them down here. But because the key signature is different, the tones themselves actually move down by a perfect fifth. So instead of being like some, yeah, how would I do this? That's okay, I don't need to sing it. But this is, what would this be? Ba, 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 ba. Ba, 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 right? So that's what that would be. So you can see, right, they're the same notes and the distances between the notes are the same, but those are not the same pitches. It's lower. I transpose that down by a perfect fifth. So we can see that that kind of looks like what is happening here, right? We have price action. We have like price action that looks like organic. And then all of a sudden we just get these teleportations. Just whoop, one day we just move down $3, move down $3, move down $3, move down $3. And what seems to be the case, right, these are these special internalizations. These are these specially heavy, some of this is direct shorting. So this one was direct shorting on GameStop. This one did involve some direct shorting, but not as much aggressive direct shorting here. These two do not look like they involve direct shorting. So really, right, I took this, for example, and said like, okay, what if we remove those? How would this chart look? Right, the chart would look something like this. And we can see if we remove these days of artificiality, these days of price engineering, and just kind of take the days that are not engineered and put them together, it looks a lot more natural. Like this looks a lot more natural in terms of how price was. We'll probably remove this because this is this big spike here is also related to one of these. So really, right, what these look like, and this is something, right, otherwise category 42 has especially been talking about these, right? We can see that these lines, right, when they go down, they have to come back up at some point. So, right, what we see is something like, okay, super shorted, and then the trade is internalized. And then the settlement is delayed, 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 and then it comes back onto the tape. So in this case, right, this looks like this may have been a part of a margin deferral, Rec 68 margin extension deferral. And when we have the full pattern, it usually looks like this. It kind of looks like Oklahoma, right? So all of a sudden we're trading, we're doing our thing, and then boop, and then all of a sudden we trade down here, and then boop, we just shoot right back up to where we were. So for example, if we make this chart a little bit bigger, right? So it looks like what occurred on February 13th, that big move up to 3166, was this trade having been internalized, all of this volume, all this sell volume that was internalized being covered here. So whoever entered this trade maybe got margin called somewhere in here and then had to cover it. And so they covered it right here. And then it got shorted back down again. So something happened in there. But what was really interesting, right, is with these trades, the price goes right back up, right? So this began, the high on the day here when this shorting began was 3168. The high of this candle was 3166. So it went back up exactly to where this level began. So this looks like this was this trade, this short covering. So if we go up, if we go back, right, and this is with the time you cover thing, right? This looks like maybe not all of it, but a fair bit of it was covered by the time you cover on December 5th. So shorts entered into this position, shorted, 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 move down, move down, move down, and then Roaring Kitty goes up, time you cover, boop, and then shoots back up. The high on the day here was 3118 or 3120, something like that. And of course, Roaring Kitty's move went all the way back, or when Roaring Kitty tweeted, the price went all the way back to 3086. So that's why I say maybe not all the shorts, but or maybe, and these happened. What was interesting is this happened intraday. This one did not. This one happened after hours. Okay, well, so this one went down and this one closed. This one went down here and closed here. But what about this one? What about this one? So one thing is, otherwise category 42 also suggested that potentially this move was from the give it to me tweet, right? So Dave Chappelle, which did not have a particularly interesting response to it. So it's possible that that was a give it to me tweet. That was a reaction to the give it to me tweet, in which case January 22nd, which was the Futurama, that had a pretty big response. Not as much as perhaps some other responses, but it is possible if that was the case, if this was caused by give it to me, though, I guess that would have been in here. No, this was the 6th. Give it to me was maybe over here, because that was when there was a market closure. It was New Year's Day, January 1st, I think. Yeah. So maybe, right? Maybe. But maybe it was a margin call versus the short position. So then who entered these? Whoever entered this and this has yet to close that position. So does somebody like, this was February 2nd, and this was the 24th. So when do we see these positions closed? The answer is not never. So what happens there, right? And what was this sell-off? All of this went up, and then the price went all the way back down. So this does look like a kind of natural bit of selling there, but then it popped back up, right? It popped back up. So maybe this was, options hedging involved. There were a lot of sold calls. Most of this went immediately back down, though, after hours, right? So nobody got to benefit from this price action, mostly the top $3 of this price action, because you couldn't really trade. Most people can't trade during that time. Although now we have 24-hour market, right? More brokerages can do that type of stuff. So the question, I think, as far as what I'm looking at on our technicals, because how helpful really is this stuff at this point? Here we had this one event. And so this was very easy to trade. Technicals worked. Oh, and then here they didn't, right? Because I was like, man, this is the first time I've tried to like really forecast. Because like, earlier stuff, I didn't try to forecast as much. I didn't try to make these types of predictions. I didn't really know how to read gamma exposure either as well. And so, I had to learn technical analysis as well. So, but this one, right, this one worked really well as far as how I was able to get resistance points and support points all through here. And then we fell off, right? So this was one of these special internalization events, big shorting within internalization. And then Roaring Kitty forced the cover. And then Ryan Cohen probably finished the cover. And then there was attempts to keep the price controlled here, but then eventually this is what really did it in. Plus that January 9th market holiday, but I won't go too much into that. So then this ended up being really regular. This was super cool. This was not difficult to trade. December was an amazing month because this was so regular. Like, I can't tell you, right? I mean, that was the best trading month I had in my life. because that was so regular, right? And then even in this was very regular. This was very easy to trade. Now all of a sudden, what's going on here, right? We get around these, they come out of nowhere. TA tells you nothing about when these will happen. This stuff, this type of regular price action, yes, this is a factor of organic buying. This is a complex system operating according to its nature, according to the spontaneous order that emerges from the independent and related actors that are using it as a forum for interaction. That's why this is readable. But this is not, right? This is sticking your finger in the drain and then denaturing the whirlpool. So this likely has something to do, right? This is what we do with all the stuff behind the scenes. This is swaps. This is, how institutions are messing with the price so that it doesn't get the margin called or something. So, right, this was very tradable. This was great. This was very tradable. This was great. This, not so much, right? So, but something has to give here. These have to emerge again. So, I think looking at these and trying to understand, okay, how can we predict maybe when these will come back on the tape, right? Is it that Roaring Kitty's tweet was internalized for 35 or 40 days until here? Or was whoever entered this position margin called? That's a good question. Was it a combination? Was Roaring Kitty's tweet back here? This is an interesting thought. Was Roaring Kitty's tweet back here internalized and then kicked out over here? And then the fact that that occurred caused someone to be margin called, caused this short to be margin called. Because this is bigger, right? This is more buy volume, or at least this is more price appreciation. We went from 25 something. We went from 25.70 to 31.66. It went up $6 in the after hours. This was a $3 move, right? Intraday. So it's very possible that this actually combined, right? What if this was a combo? And this is something otherwise category 42 has talked about. It could have been, well, but if it was margin called, then it wouldn't be a margin referral window. Tough to say, right? I'm not necessarily going to figure this out at this point, but I want to present this to you guys so you can think about this too, right? These are the things I'm looking at, and these are the things that institutions are basically making us look at in order to try to understand how price action is occurring at this stage, right? These Oklahoma patterns, right? So we got a couple of these in there, but we haven't gotten these moves yet. Now, why is this so important? Well, because back in April, what do we get? It's in Oklahoma. It was one of these, right? This is what preceded the May and June action for Roaring Kitty's, quote unquote requel back then. If that was, you want to call that a requel. Right? One here. These very clearly look like this was Oklahoma to this. Yeah. That's our little Oklahoma there. Some in here, maybe they're a little less easy to see. Maybe here. Maybe this. A little hard to say. A little hard to say in here. Maybe this one. But was this, where was this? Yeah, I think this might have been this. So this, people blamed the ATM and people got mad at Ryan Cohen. My dudes, right? We talked about this at our live stream. They were going to short this. They were already going to short this, guys. Like they were going to do that. Like I looked at this several weeks out. I was like, they're going to pump IV for 2 weeks. The price is going to go up. Called both, like we were talking about over on Reddit, right? We were looking at the Gamma situation. They were like, these chumps, right? Now, what's really interesting, and I wonder if they've seen, my content or anybody else's content being able to sniff out these kind of Gamma setups, because they stopped doing this type of stuff as clearly during the day. Our last kind of, right, we got a little pre-market thing yesterday. We got the big event last week on the 13th. Was that last week? Yeah, it was. No, I guess that was 2 weeks ago now. They stopped. They started to do this stuff like not in the options contract. It's not when the options market is open, which is very interesting. And that's back. Oh, that's vintage stuff. That's vintage GME. That's 2021 GME when we were getting that mess. Very interesting. So this was probably this. So something happened here. I think otherwise said this was something like, this may have been like related to DFE's Chewy order, something like that. In any case, I won't speculate too much, but that's the sort of thing that I'm looking at here. We can talk about this more at the live stream. Not a ton of interesting stuff options wise here. These are both pretty mixed. 26s were slightly skewed towards the ask. A little bit of profit taking on puts. The only notable one for this week was 25.50. Those were, every single one of those was at the bid. Actually, there were over 2,000. There was a block of 2,000 puts that were sold at the bid. So during today's trading, that's going to act. Well, during yesterday's trading, they did as well. But it's going to act as an upward resistance. It is a bullish trade. It expires today. So, but it's a short. It's a short trade. But maybe this trader thinks that trade's not closed. This is open. So this trader is gonna, if they don't, they're just gonna get assigned. How many shares? It's 2,000. So, dog, they're gonna get assigned 200,000 shares of GME if they don't roll this position. So, hey, that's fine. 200,000. This is the thing. Is what I mean. It's bullish. It's a bullish trade. It forces the market maker to buy shares in order to hedge this position. The market maker has to hold. This is in the money, actually. So the market maker has to be holding. What's the delta on these? Let's take a look quick. Woohoo! Let's take a peek. The delta is on the 25.5 puts. Oh, I didn't need to do that. Anyway, you can see the order. There it is. Oh no, that the market just opened. That's from today. Somebody just sold more. That's cool. There it is. 18, almost 2,000, 1,860. Total volume on the day was 2,000. Oh no, these are from today. But 2,000 was the total bid volume on the day. The delta on these puppies. Come on, you delta puppy. The delta on these. Uh, 0.89. So the market maker is holding like 180,000 shares when this trade was opened. Man, did we see that? How did that get lost, man? That just got lost? See, this is so suspicious. Probably got sent to a dark pool. Let's look. Let's look, kings. Kings. Let's look. Look with our eyes. Let's see. Do we get like the market maker buying 180,000 shares? What time did this order come in? Kings. Oh, it was in the morning at 11:10. I didn't realize it was that early in the day. So it would have been that would have been in our bullish phase. So that may have been responsible for a fair amount of our bullishness, but also why we just like hung out at. Let's go back to trading view, right? Also why we like hung out. We didn't go higher than this, right? So that would have been. Oh man, that might have stopped us. I don't know. Either that propelled us up, but then that formed a little barrier intraday here. That's very interesting. How about that? It'll still be there today, although we are chilling down in the 2450 land. Yeah, I mean, looking at our gamma exposure, if we go back here, lots of max pains at 25, so probably we're closing there. We also currently have over 98% of our calls are out of the money. That is not usual. Even 90 is theoretically supposedly not supposed to be usual, but that is what we usually see on GameStop. 98's a lot though. And it's not an OPEX. Like, it's not like what we see with the OPEXs or the quarterly OPEXs or the monthlies. People will go nuts on like the 125s, and there'll be 100,000 contracts up there, and you're like, okay, well that's skewing the percentages because like of course that's not going to be in the money. But this, I don't think this is a weekly. Like we don't even have that. I'm pretty sure we don't have that much OI at some of these upper contracts here. Let's go back. Oh wait, that's not what we want. We want this. OI. We go up to 65. All right. Well, 17,000 of them. We got a lot up here, which is dumb. I mean, cool if it went in the money, but like that's not. That skews things a little bit. So if we accept those, then it's probably closer to 90%. But still, all of this, dog, all of this is out of the money. All of it, which is not very common. If we go below 24 today, it'll mean that over 99% of all of our calls will be out of the money. It's also not something we see super often. If we do look at our gamma exposure, got my fun colored chart. You guys like the colors, colored chart. All of it, as you can see, right? All of our calls are above us, like all of them. So if something does happen, like it's stacked, y'all. If somebody wants to push this thing up and it can generate some buying feedback, right? I don't know. I don't necessarily know if Roaring Kitty's going to tweet today. But like, I don't know, something like that. If that matters, like how much do his algorithm, like does his saying stuff really pump algorithms, right? I don't know. Can't say. But let's say something like that did happen. Cowabunga, man. We're going to go right up here to 28.50, maybe, punch up towards 29. That could happen, right? If we get a day like, well, certainly 920 where we had 60 million volume, but even on like 827 or 96, we had stuff like this, which would be in the appropriate phase, I guess, for something like that. That could happen. But if it doesn't, then we probably just hang out in this land. 25 is kind of a cap. We finished between 25 and 24.50. No one's happy, except whoever engineers the price. If SPY does for some reason go nutso back down to the downside, 24 not looking super bueno as far as as far as any kind of support. It is very negative. We have a lot of put gamma there. So we do another slip and slide, maybe. I don't know if we'd slip through 23.50. It's not super volatile. We don't have a lot of put gamma. 23 is, but I don't know. We probably would just, if it's a super bearish day, kind of hang out around, maybe slip through 24 and get into this area down here a little bit before kind of recovering back up to like 24.50. If it's not, then trade kind of in this area. If we're crazy low volume and then somebody, accidentally tweeted like, you only live once. I don't know, something. Time you cover again. It goes, it'll go. It'll go. So just, that's the structure there, not necessarily saying none of that is causal, none of that has to happen, but painting a picture here of what this would look like depending on what we see happen. So still in an IV uptrend, so that's going to make things, that's make stuff even more sensitive, man. If we saw something like that, like, man, IV would just in a day, IV would go to like 115 or 120 or something like that. And then we get a ton of call sales, because the IV would be crazy. But then, it would come down maybe a little bit, but it would probably keep going up. So if otherwise category 42 is right about the 22nd, possibly being one, right? I mean, he's not being super insistent about this. I don't, mean to be like, if it doesn't, like, otherwise, no, no. But if it does, right? If there's something like that that comes on the tape intraday, then somebody looks like they're playing it. Somebody bigger, right? We did get 1,000 calls opened at 25 yesterday for next week. That looks like somebody betting on something happening maybe today-ish. Especially the way we saw stuff happen like back in the fall. Like, I wouldn't be surprised as to some of these traders are going for it. Because if it happens, like, they'll make a killing on those contracts. But not telling you to go do that. This is not trade advice. This is not financial advice. Long calls, especially long options, are written to favor the dealer. If you go ahead and trade those, you will most probably lose a fair amount of money, especially with what we've seen recently, right? With this type of stuff, with this price engineering, with transposition of the price, that ruins it. That really ruins it. So, good luck, guys. Good luck out there. Looking forward to seeing everybody. Like, I think we're gonna have a good session. I'll only be in Thailand one more week, so we'll do today's live stream and then next Friday's live stream. So the 7th will be last live streams from Thailand. So we'll be able to move the start time up a little bit. So we'll be able to move start time up We'll figure that out in a couple of weeks. But the 14th live stream, we're going to do probably move that back to like 4 p.m. Eastern time, maybe a little bit later. We'll see. But I want to make sure then Eurocrowd can jump in and we can have the full crew like we had in the EU zone. So I'll be in the US for a little bit of time, for a few weeks, and then I'll be back to the EU after that in April. So we should be able to keep times constant there. So thank you all, of course, very much for your patience with timing that stuff. We've still had great live streams in any case, so it's been great to see everybody. Yeah, so look forward to seeing you guys there. We can go into some of these deeper concepts. A lot of stuff to talk about, a lot of stuff to go into. I did write us a little agenda for a lot of stuff. Want to talk about, yeah, revisit our IV dynamics, revisit broader market thesis stuff, which we talked about. Definitely want to revisit what can I make today, what he's been working on. Take a look, maybe, think about some of these Archegos swaps. Yeah, we can do a little more Nat Turner stuff. And then we also have the what's in the box DD. So some stuff. It's going to be a cool day. Another long video, but I had fun talking to you guys about this stuff. So in any case, thank you very much. Thank you everybody, as always, for your support. Thank you for comments, questions, all of the above. And yeah, see you guys tonight's live stream, 10 p.m. We're going to do 10 p.m. Eastern time. You'll see it scheduled shortly on YouTube, and you'll see a reminder on X. So thank you very much, everybody. We will see you shortly.